everybody. Good afternoon. I wish we could all meet in better circumstances. I'm Kathy Yang. I'm glad to be back for this most awaited annual business gathering, albeit virtually, Security Bank's Economic Forum 2020. You know, so much has happened this year because of the COVID-19 pandemic, and a lot of us have had concerns on what is next. The visibility factor has really been the big issue here. So this afternoon, our keynote speaker will share with us how the pandemic has affected, one, the Philippine economy, and his economic outlook for the rest of the year. And with that, we have an insightful afternoon ahead of us, and I'm sure there will be plenty of key takeaways that's going to help everyone as we adapt and navigate all throughout this new normal. And to officially welcome us to the event and introduce our keynote speaker today, I'd like to call on the chairman of Security Bank, Mr. Alberto S. Villarosa.
Distinguished guests, ladies and gentlemen, it is my pleasure to welcome you all to Security Bank's 2020 Economic Forum. To our distinguished keynote speaker, who I will introduce later, to Ms. Kathy Yang, to our valued clients and business partners, and to our investors, analysts, and friends from media, good afternoon, and thank you for your virtual presence. The expression, "May you live in interesting times," carries with it an apocryphal story that it is a translation of an ancient Chinese curse. While that story has long been disproven, that expression certainly applies to us now. These are indeed interesting times, and whether this will be a period of blessing or curse, opportunity or threat, is really up to us. We are certainly facing something that we have not faced before, at least in our lifetime. This is something totally new and unknown. What best describes this current situation comes from the U.S. Military College, the acronym VUCA, which stands for volatility, uncertainty, complexity, or perhaps more appropriately, chaos, and ambiguity. Futurist Bob Johansson, however, proposed an antidote to VUCA, which also spells VUCA, and it stands for vision, understanding, clarity, and agility. This economic forum, sponsored by Security Bank, is our attempt to help our clients and business partners to navigate these rough seas amidst this pandemic typhoon. We wish to provide you with information that will help guide your vision, provide some understanding and clarity on what is happening, and assist you in becoming more agile in your responses to this current environment. We believe that the more you know, the better your chances to not only survive, but thrive in these trying times. I am very happy that many of you have accepted our invitation this afternoon. This forum is just one of our bank's better banking initiatives that we offer to our partners in the spirit of bayanihan as we go through this storm together. On behalf of our bank, Security Bank, thank you very much for your time and participation. We look forward to a very productive and pleasant afternoon. May I now have the honor of introducing our distinguished keynote speaker. Our distinguished guest speaker has over 40 years of vast experience and an outstanding track record of achievements at the helm of various organizations in both the public and private sectors. His expertise was born out of his experiences as a chief executive officer, a board chairman, and member of over a dozen corporations across multi-industries such as power, agriculture, mining, banking, hospitality, real estate, and investment. He was appointed as Cabinet Secretary thrice, first as Secretary of Environment and Natural Resources from 1986 to 1987, then as Secretary of Agriculture from 1987 to 1989, and currently as Secretary of Finance since 2016. Under his leadership, the Department of Finance was able to draft and introduce to Congress the first of a series of the administration's proposed tax reform packages, known as the Tax Reform for Acceleration and Inclusion, or the TRAIN Act, less than 90 days from the time he assumed the cabinet portfolio in July 2016. The President signed into law the TRAIN Act on December 19, 2017. This was followed by other successes in the legislature, such as the passage of the Tax Amnesty Act, the Tobacco Tax Reform Law, and a new sin tax reform law, which raised excise taxes on alcohol and electronic cigarettes. On his watch, the Philippines' key revenue agencies, the Bureau of Internal Revenue and the Bureau of Customs, also continue to achieve strong revenue growth rates. It was also under his leadership that the Bureau of Internal Revenue was able to secure its largest tax settlement ever in the Philippine history, amounting to roughly $600 million from a single taxpayer. Ladies and gentlemen, please join me in giving a very warm welcome to our distinguished keynote speaker, the Honorable Secretary of Finance, Carlos Sonny Garcia Dominguez III.
Thank you very much for the very generous introduction, Chairman Villarosa. President Sanjeev Vohra, distinguished guests, friends in the media, good afternoon. Thank you for this opportunity to meet with you today. Surely one of the foremost things in our minds today is when this health crisis will end so we can all move on to the next normal. The COVID-19 pandemic has brought tremendous devastation across the globe. Even with the best efforts of countries to protect both lives and livelihoods, almost every economy affected by the virus has taken a serious hit. Because it is highly transmissible, COVID-19 has proven persistent. Even in those countries that had managed to contain the infections months earlier, new outbreaks have been reported. Clearly, this is a global challenge to save as many lives as possible with as little damage to the economy before a vaccine can bring a definitive end to this crisis. For many cases, doing so will involve difficult balancing acts. Fortunately, we are seeing several possible vaccines in advanced phases necessary for approval of their commercial use. Countries that are leading in the funding and development of these potential vaccines have committed to give the Philippines priority in purchasing doses once these are formally approved. The government, for its part, has adequate funds to purchase the vaccines. But for now, as long as we do not yet have the vaccine, We will continue to manage and treat infections as we find ways to coexist with the virus. Although no one has anticipated this global health emergency or was fully prepared for its calamitous impact, the Duterte administration did not shirk from its responsibility to protect its citizens. We quickly took stock of the situation and responded with everything we had. The Philippines was the first country in ASEAN to impose strong lockdown measures beginning March 17 to save lives and protect communities. Epidemiological models developed by COVID-19 surveillance teams in our universities show that government interventions such as the lockdown have prevented as many as 1.3 million to 3.5 million infections. The lockdown gave us time to expand our capacity to deal with the contagion. From just around 1,282 actual PR tests per day conducted in the last week of March, our capacity has grown to about 29,100 average daily tests at the start of this month. On July 25th, we achieved our all-time high daily testing output of about 31,100 tests. The lockdown also provided us time to significantly expand our capacity to isolate the infected. From around 33,000 beds in our quarantine facilities in mid-April, we were able to expand capacity to 87,000 beds as of August 4. To date, 71% of these isolation beds are vacant and available for use. The latest data suggests that only less than 1% of all COVID-19 cases in our country are severe or critical. Despite this, we will sustain our efforts to expand access to testing, hire more contact tracers, and beef up our treatment capacity. We were fully aware that protecting the lives of our people first would come at a heavy price. In the first half of this year, our economy shrank by 9%. This is primarily due to the lockdown we had to put in place in the second quarter of this year as the health system and the Filipino people were adjusting to the pandemic. Our challenges are not unique. Among our credit rating peers, first semester numbers show contractions among the economies of Italy by 11.6%, Mexico by 10.2%, and Indonesia by 1.2%. We are not alone in our struggles, although the unique fiscal and macroeconomic strengths with which we entered 2020 will continue to provide us with solid footing as we confront our economic challenges. Responding to the surge of cases, the President reverted Metro Manila and other nearby provinces to modified enhanced community quarantine status starting August 4 to August 18. In the short run, this return to a stricter quarantine measure will negatively affect livelihoods, consumer demand, and production. However, if the time is used to boost all our medical resources and to prevent further spread of the virus, this development will be positive for the long haul. After all, the whole world is still learning how to dance with the contagion. It looks like 2 steps forward and 1 step backward. Given our economic situation, we expect to collect significantly less taxes than we projected to raise at the start of the year. As a result, our deficit to GDP ratio will more than double, even as the government spends more to beef up our healthcare system and to provide relief to families, workers, and other sectors hardest hit by the pandemic. We aim to keep our deficit below or at the median of the levels of our ASEAN neighbors and credit rating peers. We will bridge the budget gap with additional borrowing. In previous years, emergency spending and urgent borrowing might have been very difficult. The Duterte administration's prudent approach to fiscal and economic management made us one of the strongest, most resilient, and most creditworthy economies in the region. Signs of recovery are also emerging. Improvements are seen in the manufacturing sector as the economy gradually reopens. For instance, the value of production index for the month of June showed a slower annual decline of 22.5% compared to the 31.2% decrease in May and 41.2% in April. While the volume of production index in June shrank by 19.3% year on year, the decline was slower compared to May's drop of 28.5% and 38.38% in April. In addition, the overall manufacturing capacity reached 73% in June, up from 72.4% in May and 70.5% in April. Meanwhile, the country's total merchandise trade further eased its negative trajectory in June with a slower decline of 19.9% after a steep 35.3% contraction in May and 59.5% in April. This slower decline in the country's trade performance signals the resumption of economic activities. These improvements are reflected in the increases in tax collections by our main revenue-generating agencies. The Bureau of Customs was able to surpass its July collection target by 5% due to higher import volumes. This follows above-target performance in June and signals rising economic activity. The Bureau of Internal Revenue, for its part, exceeded its July collection target by 2%. The major tax gains last month were seen in both excise and value-added taxes, signs that consumer spending is starting to pick up. We have also learned from the industry leaders that business activities in various sectors of the economy have started to pick up following the economic standstill during the lockdown. In general, most firms reported that they have begun to see a gradual sales recovery in June, coinciding with partial reopening of the economy. Before COVID-19, all indicators showed economic strength. We were among the fastest growing economies in Asia, with an average GDP growth of 6.6% from 2016 to 2019. We had managed to bring down our debt to GDP ratio to a historic low of 39.6%. Our revenues were robust after the passage of bold tax reform measures and improved tax administration. In 2019, revenues were at 16.1% of GDP, our best performance in 22 years. This provided solid footing for our Build program. Notwithstanding the delayed passage of the last year's national budget, we managed to increase our infrastructure investments to 5.4% of GDP, or double the average infrastructure spending to GDP for the last 50 years. Inflation also remained stable and under control, averaging 3% from 2016 to 2019. For the month of July this year, the inflation rate of 2.7% stayed below the midpoint of our target range of 3 to 4%. At the end of 2019, we had achieved the lowest recorded rates of unemployment at 4.5%, underemployment at 13%, and poverty incidence at 16.7%, as compared with 23.5% when President Duterte took over in 2016. In other words, without COVID-19, we had already realized better economic outcomes for our people. When the health crisis happened, we had already received a BBB plus rating, the highest in our country's history. And even amidst the pandemic, international credit rating agencies have affirmed our sovereign rating and have kept them at investment grade levels. In fact, the Japan Credit Rating Agency upgraded us from BBB plus to A minus in June. This is a vote of confidence in a sea of credit rating downgrades and negative outlook revisions. As of the end of July, the three big international credit rating agencies have already downgraded a total of 82 sovereigns and revised to negative outlook on the ratings of 104 countries. The Philippine peso, on the other hand, remains one of the most stable Asian currencies amid rising risks. Year to date, the Philippine peso has appreciated by 3.2% against the US dollar. With our strong creditworthiness, the commercial markets and our development partners continue to provide us financing at lower interest rates and longer repayment periods. As a result, we've expanded government expenditures in the first semester by 27% compared to the same period last year. Without continued and increased public sector spending, especially on infrastructure, public health, and social protection, our economy would have performed much worse, and the first semester GDP would have shrunk by 2.5 percentage points more than it did, or a total of 11.5% versus the actual 9%. Strengths of our economy allowed us to quickly put together a four-pillar strategy to shield the Filipino people against the adverse effects of the pandemic. The strategy has a combined value of 1.7 trillion pesos, or 9.1% of our GDP. Immediate and targeted relief assistance was quickly provided to Filipino families and businesses affected by COVID-19. These include an emergency cash subsidy program, which had cost us 205 billion pesos to 18 million low-income families for 2 months. This was complemented by the 51 billion peso wage subsidy program for 3 million workers of small businesses, also for 2 months. The government is also implementing a wide range of initiatives to help struggling families and enterprises. These include credit facilities and services by our state-owned financial institutions, unemployment insurance benefits for laid-off workers, study now, pay later programs for students, online training programs for our displaced workers to upskill and retool them, credit guarantee program for small enterprises, and measures to help businesses equip themselves to operate in the new normal. We have also restarted the Build program, subject to compliance with health and safety protocols. Both Department of Finance and the central banks are in sync in ensuring that fiscal and monetary tools in our arsenals are kept sharp and ready to be used when needed. As we continue to balance the reopening of our economy with health and safety interventions, the government is doing its utmost to protect lives in ways that do not prevent us from earning a living. Every effort is also being exerted to ensure that we restore consumer and business confidence. Experts tell us that the risk of contracting COVID-19 is largely under our personal control. The risk of infection is low if we continue to practice wearing face masks and face shields, washing our hands and keeping distance, as well as avoiding crowds. When the famous boxer and Senator Manny Pacquiao trains for a fight, he prepares for 12 grueling rounds. As there can be no knockout punch that cuts our fight short before a vaccine is developed, the government's ability to sustain the fight depends on our fiscal stamina. Due to the passage of both tax reform measures and improved tax administration, we have the resources necessary to endure this challenge. But we must also conserve our resources for succeeding rounds of this fight. Pragmatism guides us as we put together an effective recovery plan that we can afford and fully execute. This plan includes 4 legislative imperatives to bring our economy back to its robust position. If we can pass these critical reforms on time, we can help businesses in need sooner and further improve the post-COVID-19 business climate. These critical reforms recognize the crucial role of a durable banking sector in ensuring that rebuilding of the rest of the economy can be financed adequately. First, we are seeking congressional approval of infusing additional capital to our government financial institutions for them to be able to act as wholesale banks and fund substantial portion of loans that other commercial banks will provide businesses affected by the pandemic. Our government banks will also set up a company to deal with problems involving solvency issues as opposed to liquidity issues. And we will be inviting other multilateral agencies and foreign investment companies to participate in this venture. Second, we seek to allow banks to dispose of non-performing loans and assets through asset management companies similar to special purpose vehicles created in the early 2000s to deal with the effects of the Asian crisis. Third, we are pushing for the swift passage of the Corporate Recovery and Tax Incentives for Enterprises Act that will reduce corporate income taxes for the majority of small and medium-sized businesses by 5 percentage points immediately. This will be reduced further by 1 percentage point every year from 2023 to 2027. The President once again called for Congress to fast-track this long overdue reform during his recent State of the Nation address. This is the first ever revenue eroding tax reform package proposed by the Philippine Department of Finance and the largest fiscal stimulus program for enterprises in the country's history. Based on DOF estimates, the outright corporate income tax reduction would free up almost 42 billion pesos in business capital in the first year of implementation and 625 billion pesos over the succeeding 5 years. Let me emphasize that this reform measure is really about trusting the private sector. Instead of increasing government's budget and passing funds through what tend to be less efficient government programs, we will leave the money in the private sector's hands to revitalize their businesses. retain their employees, and create even more jobs for Filipino workers. The CREATE bill will also modernize our incentive system and allow us to tailor fit fiscal and non-fiscal incentives to the investors we want to invite. To be clear, this is on top of the standard menu of incentives available for eligible enterprises. Some stakeholders seem to incorrectly believe that this proposal makes the standard menu more discretionary when it is completely independent of that menu. Finally, the fourth legislative imperative seeks to provide greater support to agriculture by giving the banking system the ability to support the whole value chain of agri-enterprises. Even as we navigate through very difficult circumstances, we intend to maintain fiscal discipline, make our financial sector more inclusive, and introduce more reforms that will help us consolidate a pro-business environment. We are maintaining our Build program. Infrastructure projects will be the best way to revive the economy because of their high multiplier effect. We are committed to pursue bold fiscal and economic reform measures, such as the remaining packages of our tax reform program. These are improvements in our property valuation system and taxation of passive income and financial intermediaries. We will also push for the package of complementary bills that will open up the country to more foreign direct investments, such as amendments to the Foreign Investments Act, the Retail Trade Liberalization Act, and the Public Service Act. Given these uncertainties posed by the health emergency, it will be difficult to make definitive pronouncements about the longer-term prospects of our economy. Suffice it to say that the Development Budget Coordinating Committee projects a strong rebound in 2021 with a GDP growth reaching 6.5% to 7.5%. The Duterte administration will not rest until we have prevailed over this extraordinary challenge. We will redouble our efforts to protect our economic gains over the past 3 years and prepare our economy for a recovery, strengthen our resilience, and solidify our return to the path of inclusive growth. I trust that you will continue to support us in this effort. We are both confident and optimistic that we will beat this pandemic and come out of it even stronger than before. Thank you.
Hi, everybody. Thank you so much, Secretary Sunny. You know, I love the optimism. You've really been the North Star. And welcome to the more than 737 guests online. Thank you so much for joining us on this very rainy afternoon in Manila. If you're in Thailand or Japan, welcome. Konnichiwa. I believe we have a diverse set of clients out there. Thank you so much for joining us. Don't you just love his optimism? I mean, the Philippine economy just contracted by 16.5% in the second quarter. Pretty surprising, but well, expected. Second quarter really took the brunt. And as Secretary Sunny was saying earlier, we're not alone in this. We have neighbors also suffering the same. So the real game really is in how fast we recover. And I like what he said about the difficult balancing acts. And you know, you can really feel the difficulty if you were a government planner, an economic planner, you know, and how to balance the many different moving parts. And central to that is really how to find a vaccine. And in the meantime, find a way to just work around while we can. And in fact, a lot of the metric really is upon us, you know, and how to protect ourselves. I posed a poll question at the start of this forum, and I wanted to get back to that and see how you responded. So the question was, do you think the Philippine economy's performance will be able to bounce back by 2021? There you go, 727 of you in this e-forum answered yes, a resounding yes, and just a 29% saying no. So I take heart in that optimism. You share the optimism of the good secretary. Secretary Sunny, it's good to see you again. Good to speak with you. How have you been?
It's you, but better than most.
Yes, I just started to hear you there. I missed the first part. What do you think of the poll results? You expected it, or are you pretty surprised? They were really optimistic. And on a day, second quarter economic growth shrank by 16.5%.
No, I think it's a good result. That's basically 70-30, and that means to say more than double of the optimists. They're more than double optimists than pessimists.
Yeah, I love it, and that includes the both of us here. Just trying to see beyond what we can't. I know that you made a mention of the importance of the public sector spend. Our economy would have gone not grown without the spending. So there's a key question here in the forum. With barely 2 years left in the administration, the question is, how do you intend to prioritize and fund the key infrastructure projects? Secretary Sen.
Well, our funding program for the next 2 years are again going to follow the basic pattern of the first 4 years. Essentially, we are going to be borrowing this year around 3 billion pesos. Next year, about the same amount. And on 2022, we estimate it will go down to 2.3 trillion pesos. And essentially, the breakdown will be roughly 75-25. 75% domestically and 25% foreign borrowings.
So while we wait for that vaccine, Secretary Sunny, how does the Philippines plan to fight COVID-19 and maintain economic stability? Because it's always been a balancing act between health and the economy.
As I mentioned earlier, the real first line of defense are not the frontliners. The real first line of defense is yourself. So you have to keep yourself healthy. Wash your hands, wear a mask, stay 6 feet away from others, and avoid crowds. So essentially, that's really the first line of defense. So it's really up to you.
Yeah, so you've heard that, all 727 of you, we all have to do our part while the government tries to get the economy back on track. And a lot of that really is based on that fiscal stamina. I like the metaphor you used with Manny Pacquiao. Speaking of that fiscal stamina, what are the most important high priority measures, fiscal stimulus and financial assistance measures that the government's working on? And what are you requiring the stakeholders to contribute to that?
Essentially, a crisis like this brings out to the fore what you did well and what you did not do well in the past. Okay, I think that as a society, we did very well over the past years in strengthening our financial systems, in being very prudent in our spending, in passing very important tax reform laws. And for that, I have to thank both the Senate and the House for passing the various tax reform measures, including the Rice Tarification Act, which actually brought down the price of rice by around 20% from the high of 2018. So those measures prepare prepared us, gave us the stamina to take this very heavy hit that frankly no one anticipated. So I guess it tells us also what we should do for the future, and that is be very prudent in your spending. Make sure that your tax collection efforts are and your tax collection agencies are doing their job, and making sure that our borrowing are very conservative, and that we maintain a very good credit standing around the world. Believe me, if we did not have those programs in place that we had done, it would have been very difficult for us to get the loans at the terms and interest rates that we have been able to get. Our one country, I'll not name the country, but one country borrowed a few weeks ahead of us in April and paid interest rate over 25 years of almost 4% per annum. Our rate for the average similar rates was less than 2.8%. So that means to say foreign investors are very confident in us. The other thing is look at our peso strength. It's only the Philippine peso and the Japanese yen that have actually strengthened from the beginning of this year. That means to say foreign investors are confident that the Philippine economy is going to stay on a even keel in this pandemic. So those are some indicators. Our borrowing capacity, the terms we get, plus our very steady peso. Incidentally, when our credit rating is good and our borrowing capacity is good, we provide an umbrella for the private companies to go into the foreign debt markets and raise capital as well. Last year, by this time of last year, I think total foreign borrowings were about $3.5 billion in the private sector. This year, it's over $5 billion. And again, they get very good terms because the country itself, our sovereign credit rating is quite good. So when there are people who say, oh, forget the credit rating, I think that's very anti-Filipino.
Yeah, I just wanted to welcome your teammates are with us, Yusek Beltran, Treasury De Leon, and Asek Lambino. I believe they are able to also contribute to this conversation. Should you wish to call on them, Secretary Sunny, just feel free to do so. Indeed, the word really is pragmatism, that this really is the guide for the government in its fiscal stamina. There is a question on deficit spending. Is the Philippines considering deficit spending to recover from COVID-19 to restart? And if so, how do you intend to finance this?
Well, as I mentioned earlier, our deficit estimates, our GDP, fiscal deficit to GDP is estimated to be around 9.6% in 2020. By 2021, we will probably bring that deficit down to 8.5%. And by 2022, to bring that down further to 7.2%. And as I mentioned, this will be financed through a combination of domestic and foreign borrowings, roughly at the 75 to 25% ratio in favor of the domestic market.
There's a question
I don't know
here
if
from the audience.
Go ahead. Leah wants to add to that.
Ma'am, good to hear from you. Good to see you. Please go ahead.
Good afternoon to everybody. This is Leah De Leon. Secretary, as we have also been planning, obviously there's also some discussions with the Banco Central that we will also be tapping some of their facilities, and which we have already started with the 300 billion advances that BSP has provided to the Philippines government. Of course, we've also seen a lot of emerging markets who have also been doing a lot of unconventional monetary accommodations to be able to monetize the deficit. But we have not yet gone to that extent. We are still doing what's possible under the BSP charter. And we see with the performance of revenue collections in July, then we are hopeful that this would continue to be the trend, and that would also alleviate the funding requirements for the rest of the year. Back to you.
Yeah, thank you, ma'am. Yeah, there's a question here on the window to see government plan programs in curving up the flattening economy of the Philippines. Could you give us a window, Secretary?
I don't understand the question.
Yes, could you give us a window to see the government plan spending programs in curving the flattening economy of the Philippines? Maybe give us specifics.
Yeah, we just announced this morning the budget for 2021, and that will be around 4.5 trillion pesos, around 9% more than this year's budget. So we will continue, and we will focus essentially on healthcare and all aspects of healthcare, and focus also on our infrastructure program, because the infrastructure spending has the best multiplier effect on the economy. So those are the programs that we will be focusing on. I believe that the DBCC, or the Development Budget Coordinating Committee, has issued a press release and a public statement this afternoon. So the details are included there.
Yeah, Secretary Sonny, there's a persistent question here that is aligned with that pragmatism guiding the government and its fiscal stamina, because a lot of the business groups out there have been battling for a rise, which you previously said to be unfundable. Do you think that's still the case? Is it still possible to do it in phases so it won't be costly in one go? Perhaps maybe Yusek Beltran or Asek Lambino can contribute to the conversation, if you wish, Secretary Sonny.
Please, if
yes, Yusek Beltran, go ahead. Good to see you, sir.
Oh, what about? What is that question again?
Yes, the question is, because a lot of the business groups have really been battling for a rise, but can it be funded in phases because it's going to be costly? Yusek Beltran.
Yeah, actually it can be funded if we are able to look for revenues during the year. But as of now, we don't see that yet. But of course, the estimates for 2020 to 2022 have been very conservative. And we know that we can look for efficiency somewhere where we can generate the level of revenues that will help us put more programs there as the year progresses.
Where do you think you can find it, Yusek Beltran?
More efficiencies in collection, tax administration improvements. For instance, we have not yet placed in there the e-invoicing, the benefits from e-invoicing, which might bring about a higher level of collections. There are many tax administration improvements that we can look for everywhere. Also, in the economy, we have the forecasts for the economy have been muted. We don't want to be overestimating the growth target. So we are using the lower end. In all our estimates, we use the lower end of the growth, lower end of inflation, so that when the actuals come in, most of the time we exceed it. We are very hopeful
Is
that
it-
we can achieve the revenue targets that we have set.
All right, what about for ASEC Lambino? If you could switch on your camera, that'd be great too, so we could see you.
Am I on? Oh, thanks.
Yes,
Thanks,
you are.
Kathy, and good afternoon, Secretary Dominguez. Actually, last night, Kathy, the lower house passed on second reading a version of a stimulus package, and there are various versions that have been filed. The Arise bill that I believe you are referring to is the one that had the highest price tag, if you will, no? At over 1.3 trillion pesos. Something that would have really blown the deficit out of the water. So that's why the Secretary and the economic managers have been very clear that any stimulus package should, of course, allow us to respond effectively. As Secretary said, keep the powder dry for the succeeding rounds of this fight that we're waging with COVID-19, but also maintain our position of being a responsible development partner to our bilateral and multilateral lenders. And that means, as I believe was referenced by Yusek Hill as well, no? Staying within the middle of our ASEAN neighbors, as well as our credit rating peer group. In terms of the deficit and in terms of our debt to GDP ratio. Again, the benefits of having an investment grade credit rating really redound to the Filipino people in terms of the sustainability and the prudence with which we're able to manage our debt levels. Thank you.
Right, thanks for that, ASEC Lambino. Just to wrap, Secretary Sunny, I mean, we've done pretty well on those credit ratings. We've held pretty good. There is a final question here, and it relates to the CREATE bill. Maybe you could give us a timeline that the government is looking at in terms of the CREATE bill's passage and the start of the implementation. What are the priority industries that this bill will take up?
The president has mentioned CREATE already in two zonas. That was the one in 2019 and this zona. So I guess the timeline is, if you listen to him, is right away. And which industries are we talking about? Basically, it's not industry specific. It is actually to reduce the tax rate to all companies, not only to big foreign companies, but to all companies. And that is a reduction of from 30% corporate income tax to 25%, and further reductions down the road. That will provide the economy the biggest stimulus ever. And it proves that this government is trusting of the private sector, that the private sectors will be able to responsibly spend that saving, instead of giving it to the government, spend that in improving their businesses, maintaining their employees and such other programs. So essentially, it's a private sector trusting program. The CREATE bill also seeks to rationalize our incentives program. You know, I don't know if you know it, but we have multiple agencies that are authorized to give tax incentives, and there is no centralized or organized way of doing it. In other words, they are authorized to give incentives to anybody they wish, rather than have a specific strategy. Like, for instance, I always bring up this example. There is not a single lens manufacturer in the Philippines. And yet, every cell phone you have has at least two, possibly three um lenses. Why have we not focused on inviting this very high tech and labor intensive industry to the Philippines? Because everybody is doing his own thing. So what we want to do is rationalize our incentives program and focus on bringing in those companies that will actually contribute to this economy.
As a final point, Secretary Sonny, how fast? When do we recover? Q3, Q4, Q1
I
next
beg your
year?
pardon?
How soon before we recover?
You know, a lot of our recovery will depend on our ability to either live with this virus or to conquer it. Of course, the latter is better. But if that is not in the immediate horizon, probably it is very important for us to learn how to live with it and to also not get discouraged when we have spikes. The whole world right now is experiencing these spikes. It's not only the Philippines, okay? Japan, which had no infection for a long time, is seeing it all over. Vietnam is seeing it coming all over also. So we just have to deal with it, okay? And you know, this business of saying, oh, it's so bad, we can't do anything about it, that's the wrong attitude. The attitude is we have this contagion and we have to live with it and live with it long enough so that we can defeat it.
I totally agree. The onus is on us to actually have that personal control, like you mentioned, of protecting ourselves so we can protect others. Secretary Sonny, it's been a pleasure. Thank you so much. Do take care, sir,
Thank
and
you.
all the best in
Thank you
keeping the
very much,
economy
everyone.
on even
Thanks,
keel.
Albert.
Secretary Sonny Dominguez of the Department of Finance. Thank you, sir. Now, before we go, we'd like to call on the President and Chief Executive Officer of Security Bank, Mr. Sanjeev Bora, for his closing remarks.
Good afternoon, everyone. I hope you found the exchange of ideas this afternoon insightful and thought-provoking. First and foremost, I would like to thank our distinguished guest, Department of Finance Secretary Carlos Dominguez, for joining us today. Kathy, thank you for being a host and moderator once again. And to our clients, business partners, friends from the media, we really appreciate you taking time off to be part of our first online economic forum. Every year, it is your active participation in this forum that makes it even more meaningful. This economic forum was important because it provided us with a snapshot of the country's readiness to thrive even in the face of COVID-19. As our chairman, Albert Villarosa, said earlier, we are certainly facing something we have not faced before, at least not in our lifetime. This economic forum is our attempt to help our clients and business partners navigate these rough seas amidst this pandemic typhoon. Earlier, Secretary Dominguez talked about the Philippine economy and the impact of COVID-19. He also discussed the economic outlook in the short term, next 6 months, and long term, a year and above. In one of his previous interviews, Secretary Dominguez has stressed the urgency of government's resolve to support the economy by complementing BSP's monetary actions with a strong fiscal response. Therefore, the Philippines is said to be in a good position to withstand the economic impact of COVID-19. We have been ranked 6th by the UK's Economist newspaper among other emerging global economies. The country's fiscal and economic strength born out of improved revenue flows, tax reforms, debt management, and wise spending and investing have served us well. During his State of the Nation address last week, the president emphasized the need to facilitate the country's economic recovery, stating that the government will intensify its effort to help businesses. Secretary Dominguez also mentioned the post-COVID recovery plan of the Philippine government. We can assure you that Security Bank is one with the nation in helping accelerate economic growth and stability for the welfare of the Filipino people. We will continue to deliver better banking. In the past couple of months, we have been redoubling our efforts to engage with clients and provide better banking solutions in response to the needs of the time, such as retail clients can now open an account from the safety of their homes through our online account opening via Skype. Customers can now transfer funds to other participating banks and e-money issuers for free until the end of the year through InstaPay on our mobile app. Our e-give cash feature makes sending and receiving cash easier, even to those without bank accounts. On top of providing an enhanced, better banking experience at a much needed time, we also launched our Get Better campaign to support medical institutions, local businesses, students, and families. In support of the Philippine Red Cross, we helped establish a molecular laboratory for COVID-19 testing and acquire negative pressure ambulances. As the exclusive bank partner of St. Luke's Medical Center's convalescent plasma treatment, we help fund the treatment of indigent COVID patients. We've partnered with institutions such as Singapore's 88 Tuition and Education.ph to make e-learning more accessible to Filipinos. We've also offered HR and payroll solutions through partners to help companies of small sizes manage their businesses at this critical time. As always, we would like to thank you all for your continued trust. Our customers have always been the driver and inspiration of our efforts and accomplishments. This is precisely why we are motivated to be your partner in success. And we are going full throttle with building and strengthening partnerships with key stakeholders across different industries. So later this year, we will be staging similar virtual events for those in the BPO and healthcare fields. Bringing people together like this is important to us. Sharing our knowledge and networks with one another is key towards ensuring the country's success during these challenging times. We are certain that we will come out of this current crisis stronger and better equipped to help the country get back on its feet. Security Bank is with you in striving to overcome this pandemic and adapting to the new normal. We are hopeful that it will get better. Together, we can get better. Maraming salamat.
Thank you so much, Mr. Vora. And that is quite an assurance that this is not just going to be the first and only, but the first of many other virtual events. I truly hope you enjoyed it. It's pretty new. We hadn't done this before. I've done the Security Bank Fora every single year from many years back, and I'm very thankful. I can't see an audience, but I can be assured that all 600, 700 of you who stayed for the hour have learned how to find their North Star and be a little bit more optimistic, to take care of yourselves so we can take care of others and the economy. That concludes our Security Bank Economic Forum 2020 on this rainy Thursday. Do take care if you're in Manila, in other parts of the region. Have a great day ahead. On behalf of Security Bank Corporation and the organizers of this annual event, we would like to thank all of you for taking the time to join and take part. It's been a pleasure to connect with you. Thank you and keep safe as always.